Hello, everyone, and welcome back to Motley Fool Conversations. I'm Motley Fool analyst Rachel Warren, and today I'm excited to welcome Liz Tran to the show. Liz is the founder of InnerGenius and a leadership coach to CEOs and founders of some of the world's fastest growing companies. She's worked with companies like Facebook, Instagram, and the Ford Foundation, and her transformative work has been featured by publications including The New Yorker, The New York Times, The Today Show, Bloomberg, Entrepreneur, Fast Company, and other publications. She brings engaging and interactive workshops to startups and Fortune 500 companies, speaking to employees about how to avoid burnout, build unshakable confidence, and unleash their inner genius. Liz is also an expert on unlocking employee potential in the modern workplace and redefining what it means to be an exceptional leader. She is the author of The Karma of Success and the newly released book, AQ, A New Kind of Intelligence for a World That's Always Changing. Liz, welcome to the show.
Thanks for having me, Rachel.
So excited to speak with you today, and I want to start off the conversation by talking about your new book, AQ, A New Kind of Intelligence for a World That's Always Changing. Now, in your book and in conversations I've seen about it, you assert that IQ was the product of industrialization, EQ emerged from globalization, AQ, short for the agility quotient, is the intelligence born of the tech revolution. So I'd love if you could tell us about your book and its core themes and why it's relevant not just for leaders, but also for investors in today's market.
It is so important for us to understand the actual rubric by which we are going to be evaluated for our success and happiness in life. And the idea for AQ actually came to me about 10 years ago when I was working in venture capital. So I was an executive at a firm called Thrive here in New York City. For those of you who follow venture fund news, Thrive just raised their 10th fund of $10 billion. But when I started there, we were fewer than 10 people. And we were really just starting to begin to understand what made investors and also company leaders successful. The big project I embarked on was to interview our most successful founders, the ones who had exited or pulled off really great M&A for their companies. And I gave them personality tests. I had long interviews with them. And at the end, I could not identify any commonalities they had, except that they were always changing. They had high AQ, which is what I call the agility quotient. It's your capacity to handle change, uncertainty, and the unknown. I kind of left that there 10 years ago. And then as the pandemic occurred, I started noticing that even people who had really high IQ or EQ were struggling during this time of tremendous uncertainty and change. And then finally, about 2 years ago, when I became a parent myself and started to think about what it was and why I was struggling with this big transition in life, and also there are larger micro, macro changes happening in the world at that moment. And I just realized, you know what, this definition of success that we've all been given around, do well in school, do well on standardized tests, follow sort of what has been prescribed to you through a blueprint, that's not working for anyone anymore. And that's especially true for investors who make up a big part of the clientele who I coach, meaning I speak to them on a weekly or biweekly basis for years to get them to reach their greatest potential as investors.
Something that I thought was really interesting is this assessment you've developed to identify your AQ archetype. And I'd love if you could talk about what that is and kind of break that down for our audience.
Yeah, absolutely. So when we talk about being high AQ, the opposite of that is being rigid. And rigidity comes from when you're sort of stuck in a mindset, stuck in a perception of the world or stuck in a perception of yourself. And so what the AQ archetypes assessment does is it helps you to actually see yourself more thoroughly and codify what your strengths and weaknesses actually are to help you spot blind spots. I actually think this is one of the core fundamentals of being a competent and successful investor these days is this constant pressure testing of yourself, of understanding where your biases are, where your blind spots are. And that's actually what the assessment helps you do. It characterizes you as one of 4 archetypes. You're either a firefighter, great under pressure, great in emergency situations, but not very planful. A novelist, which is the opposite of that, extremely planful, goal-oriented, great at synthesis, and narrative, but not so good at emergency situations. You could be an astronaut, which is the most quote unquote innovative of all the types. You're always, thinking about the next frontier of innovation, but people might not be able to quite follow you because you move so quickly. And then finally, the neurosurgeon, which is sort of the most thoughtful, the most diligent, and the one motivated by excellence, but can also move a lot more slowly. And so for us, we need to understand our type because one's not better than the other, but you need to know how to make the most of the specific hand that you've been dealt and know how to play it with sort of the most intentionality and to be able to see yourself extremely objectively. I myself am a novelist. I love making a plan for my life. I always have a 5-year plan. I always have an agenda for every call. I always have my week mapped out exactly, how the meetings need to fall, how everything needs to go. But I do get turned upside down when, for instance, we have a blizzard in New York City and I meant to fly for a work conference in Miami tomorrow. So just knowing the type you are. Rachel, did you by any chance take the quiz or know your type?
I haven't taken it yet, though. I want to.
Yeah, but it's a great starting point. It just takes a few minutes. And so what I say is that should just be in your, if you are in this world now, even if you have years and years of experience in doing what it is that you do, particularly as an investor, it is worth constantly reassessing and pressure testing what your blind spots are. As an example, I work with someone who is a partner at a mid-cap investment firm. She's been investing for almost 20 years. And recently, she has seen that a lot of the CEOs and the businesses that she recently invested in are struggling because they have not been able to really grasp the possibility of AI. And these are businesses that they've been excited about for years and done a lot of research around. And despite her 20-year experience, it's up to her now to reassess actually where she's strong and where she is weak in this new paradigm.
And as you asked me if I've taken the quiz, let's say you're an investor listening to this and you hear these different archetypes, neurosurgeon, novelist, firefighter, astronaut, and you're thinking, okay, I kind of have an idea of which one I align towards. Once we figure out our AQ archetype, how can we use that as a tool to shape more effective investment strategies?
So I'll take an example. Let's start with the astronaut, for instance. The astronaut is always going to be drawn to passion, what excites them, right? And so when you are an astronaut, you should know that you are going to be more compelled to do the work or do the research and focus on the parts of your portfolio that you find to be exciting, future-oriented, something new that you're learning. And you're less likely to do sort of the boring stuff, right? Like, there's a lot of, in any job that you have, no matter how much you love it or how much you're in your zone of genius, there's just mundanity that needs to happen. There are just details that you need to sort through. And knowing that about yourself, I think is very key because like one thing that I think is really important right now, as an investor is you have to roll up your sleeves and kind of do the grunt work, even if you're a partner, right? Or even if you're very far advanced in your career and you have a team of analysts who are helping you do everything. The world that we live in right now, because information and reality is changing at such a rapid pace, we cannot rely on other people. You still have to roll up your sleeves and kind of do the grunt work to re-understand what's happening in the world. To dig through company reports, to look at research from a different standpoint, to go back and kind of do some of that stuff that like maybe you did earlier in your career. But I think that's harder for an astronaut because they constantly want to be on the next cool thing that's on their agenda. But really it's about going back and also saying, okay, I want to spend time with these decisions I've already made. I want to pressure test. I want to calculate if like this was actually right or not. Because for me, AQ is about not just moving on to the next thing and pivoting and being on the frontiers of innovation. That's part of AQ, but AQ is also about strategic unlearning. It's about taking what you thought before and then essentially asking yourself, is this still true? And at regular intervals, perform these unlearning audits where you ask yourself, is this actually right? Before you move on to the next thing. So for an astronaut, for instance, you can understand where you're being pulled and then understand what what deficiencies you have too, in terms of what doesn't interest you. So all the archetypes have that passion, that motivator that gets them out of bed. And then they also have the areas that they don't naturally gravitate to. And so for all of them, when you learn about your archetype, pay attention not just to your strengths and your talents, which of course we need to underscore in this world where we're all growing our AQ, but also creating a plan to balance out some of those, I don't want to say weaknesses, but some of those areas that are of less interest to you. Because at the end of the day, being a high AQ person means being able to grasp all the different ways that the 4 different archetypes might see the world. And even if you are very much one archetype, being able to embrace and deploy all the other types as well.
Yeah, I think that's a really helpful way to think about it. And one of the things that's, I think, also interesting, and you sort of alluded to, is we are in an age of constant information, and that's very much true as it pertains to, retail investors in the stock market. Something you assert in your book, the old adage, the only constant is change. And I think something else that I really enjoyed was this idea that there's this need for a new kind of intelligence that can, as you've been talking about, help us handle that constant change, seize new opportunities, and that adaptability is a really key defining skill. And of course, that's something that's really applicable as long-term investors. Talking about these different archetypes, do you think that there's a specific profile that's likely to suffer from paralysis analysis during market shifts and corrections? And if so, what are some of the ways to approach and correct that?
Yes, that's such a great question. So to understand the archetypes, I should just back up and share that the world is divided into 2 types of change, 2 buckets that we face every day. And the first is reactive. Those are the things that happen to us. And we all understand that, right? Storms that come, flights get canceled, the stock market moves in a way that you aren't anticipating. These are the things that are happening to us without our governance. And then the second type of change is proactive change. This is the change that we push forward ourselves. So this might be, looking for new personal habits, or changing the way that you eat, hiring a new person onto your team, the things that we're choosing for ourselves. And so half of the archetypes are going to be great and adept at reactive change, and the other half are not going to be. So there's a blend. So for instance, a firefighter is great at reactive change and not so great at proactive change. And so the advice that I would give in this world where information is always flowing in and things are always changing is that we all need to double down and get really, really good, no matter what your type is, at that reactive change. And losing that type of, I guess what I'll say is that we will always be surprised by shifts in the market. That this is just a objective reality that is going to get even more true as the weeks and years go on. And so there's this part of agility that requires familiarizing your nervous system with a little bit of chaos. So that, let's say, there's something that happens in your portfolio that is really startling and can be confidence shaking and can make you question whether or not, why you made that decision, whether or not you are inherently good at what you do, question all your other decisions around that. And to be able to separate your nervous system from what's actually happening and just say, okay, this is where we are. There's an increase, it's almost like exposure therapy, where we just all need to get better and better and better at these massive shocks to our nervous system so that we can very calmly handle them. And so that's what I mean about getting really good at reactive change. So naturally, the astronaut and the firefighter are going to be really, really good at this. But if you're a novelist or a neurosurgeon, getting into the habit of putting yourself in situations that are new, startling, uncomfortable, make you feel like you are over your skis in terms of the work that you do, so that in these moments when naturally the plan that you've put in place, everyone, all investors have a specific, buy and sell plan that they for their assets. When in these moments when that gets shaken up, you need to be able to maintain your objective calm, so that frontal part of your brain, your cognition can actually work. You can be creative. You can think rationally. And so that's a huge part of AQ, especially for novelists and especially for novelists and neurosurgeons. Can you really get yourself comfortable with discomfort, because as a retail investor, I'm telling everyone, if you think there's been a level of discomfort over the past few years, it's only going to grow exponentially as our world becomes more and more unstable.
Well, and something that I think as well is really interesting to think about as long-term investors, understanding this reality that you've been discussing and really leveraging the power of AQ to kind of free ourselves from these patterns of avoidance and cultivate more agility when it comes to actual investment decisions. So maybe you can delve a little bit more into how some of those principles as it relates to AQ can help us be better decision makers in the current and, of course, long-term market environment.
Yeah. And I think this is especially true for long-term investors, is that the way that I describe this in AQ is about wearing both a green hat and a black hat. And what I'll explain by that is that there's this way of describing different methods of thinking. And there are 6 hats. Each color represents a different way that you can work through a problem. So for instance, the white hat is just facts and figures. It's just understanding literally the information in front of you. The black hat, which is one of the hats that, all investors need to hold, is truly that of what is the worst case scenario? What is the downside here? If everything goes wrong, what would that be? What are all the details that I need to understand here? It's almost the sort of cynical, pessimistic, but also just very realistic way of seeing the world. And at the same time, I think that what's required for AQ is to hold that black hat in tandem with the green hat. And the green hat represents future, hope, potential, what could be in the future for your investments, right? You're always looking at, okay, if I believe the story that's going to happen, then we're going to get, X rate of return on this because, this company, this stock is going to live up to its greatest potential. And so what I think is really interesting is that investors are being stretched to wear both of those hats equally. As are operators. I mean, I think we all are. And so there's this is what I mean by AQ, is that there's actually like this fluidity and this flexibility with mindset where you can actually hold these two very opposite sides of the spectrum simultaneously. And so I'll give you an example of that. One of my clients is a GP of a crypto fund, and he holds hundreds of millions of dollars in his portfolio in liquid crypto assets. So constantly evaluating whether or not he should buy or sell. And of course they have, a very, very detailed sell plan that they've worked on for, they've had this in place for 4 years. And then they have individual plans for each of the individual assets. And then in this past fall, as things started to change a lot in crypto, there was this big conversation of, do we sell everything? What's going to happen? Is there going to be a downturn? And he, for months, would look at that sell plan every single night in different parts of it. And he would this is what we call in AQ language, he would strategically unlearn. So he would look at the sell plan and think, does this actually make sense? Can I pull more data? Is this accurate? And truly, 80% of the time, 90% of the time, he would leave these thinking sessions and think, yeah, actually this sell plan's right. Right? And so that was the thing. It's like there wasn't actually that much movement, but there was the constant black hat of thinking, is this wrong? Right? Was I wrong before?
Self-questioning, yeah.
He didn't really change his plan at all, like when he looks back at this month-long period, but it was all necessary to get to an accurate understanding of not just holding the green hat of our sell plan's right, we did a great job, we're just going to keep going with this, the market looks good. And then here we are a few months later, and out of all the top funds, he was the only one that sold and actually timed it correctly. And all of his GPs and his investors said, yeah, you look like a genius. You were the only ones who did that. And it was his willingness. The reason why, quote unquote, he looks like a genius now is because he was willing to look like a moron for months. To constantly make himself think, right, were you wrong? Were you wrong? Were you wrong? Or is there more data I can pull from somewhere? Should I look at, the trades that ETFs are doing? Should I keep, is there an area that hasn't been explored? And he didn't just rest when he said, yeah, okay, the sell plan looks right. He would do the same thing the next day from, 9 p.m. when he put his kids to bed to 11 p.m. at night, he would just go back through and say, okay, am I a moron? I don't know. Let's figure it out.
That element of constant learning, I think, is also something that's so applicable even to those of us as individual retail investors. I mean, in your experience, this is kind of related to the example you just gave. Do you tend to find that high AQ investors adjust faster to changing market conditions? I don't know if there's any additional research you have related to that, but I find that a really interesting thing to ponder.
Yes, 100%. And what is most important is, yes, they do respond faster to changing market conditions, but actually what the biggest differentiator is more psychological. It's just that they feel much more comfortable with changing market conditions. There isn't, again, sort of that like fight or flight, because when it comes to being a long-term investor, what you need to do is have your wits about you all the time. And in these moments, especially these moments with changing market conditions, you cannot be the worst version of yourself. You have to be the best version of yourself. And so what AQ is about is that you take these changing market conditions and to you they feel normal, or you're able to accept them. There isn't this feeling of like, why is this happening to me? Why is this different than I planned? Whose fault is this? Is this my fault? There isn't this level of sort of self-blame, other blame, or even, scenario blame that a lot of us can fall prey to, of just, hey, this is what I wanted. Like, whose head can I put on the stake right now? It's a little bit more of like, okay, this is what it is. And the high AQ person doesn't ask, why is this happening to me or my portfolio? But instead asks, okay, how can I step up? Why is this happening for me? What can I learn?
And in your experience, whether it's in observing or consulting with company leaders, fund managers, how does AQ and its various facets apply to capital allocation decisions and portfolio management? And if you have any data related to that, it'd be really interesting to hear.
Yeah, I mean, AQ is highly, or rather the lack of AQ is highly linked to various psychological biases that can really impact an investor's mindset. So for instance, confirmation bias. Once you've already made an investment or believe that something is going to be a good investment, then you're going to start to look at everything you see as confirmation that is actually happening. And there actually have been studies that show across a group of Chinese investors that the ones that were less susceptible to confirmation bias, aka greater AQ, actually did show greater returns. And then the same thing applies at the corporate level. So employees who show a greater learning aptitude are promoted more, they make more money. And there have been studies that also show that AQ is the greatest predictor of success at any person's job versus IQ. And when you also go back to the origins of IQ, there was a long-term study there's a long-term study by someone who was a pioneer in IQ named Lewis Terman, and he basically followed 1,500 kids who had scored as genius level on their IQ throughout their entire lifetimes. So from when they were testing into this, at the young childhood ages, up to when they died. So the study was only completed when all the kids in the study passed away. Wow. And what he found was that even though these kids, they went to better schools, they started off kind of at a faster clip, exceeding their peers. By the time they got to their 20s, 30s, and 40s, a lot of them were just normal people. There were no standout artists, there were no standout politicians, no one who had won any sort of, scientific or research prizes. A lot of them were doctors, law clerks, just sort of like, regular people that you meet in life. But there were actually a handful of kids who were rejected from the study for not having a high enough AQ or not having there were actually several kids who were rejected from the study for not having a high enough IQ who went on to win the Nobel Prize. Wow. That is actually research that shows that, there is something to IQ. It's not to say that it is not an important element, but it's not going to be the differentiating factor of excellence. And I think that that's something that was different from what we've been taught. And just a big part of AQ is just accepting that and realizing that there's a different paradigm by which we can also evaluate ourselves.
And is there any data you've seen, whether observationally or otherwise, about how founders, execs of public companies with high AQ tend to make better financial or investment decisions, or just decisions for the direction of the company overall? I mean, that could be publicly traded examples or otherwise.
Yeah, I mean, I think that the proof is in the pudding in a lot of ways. Like, I think as just a very specific example, to go to one person, N of one, I think about when Satya Nadella took over Microsoft in 2014. And, the stock price at Microsoft had been flat for a number of years. And they had really missed out on big trends like mobile, social, gaming. And investors were not bullish about that stock. When he took over, the very first thing that he did was, instead of making, kind of big strategic decisions, he turned around the entire culture and he said, we're not going to be a know-it-all culture anymore, where everyone says, I'm right, I'm the expert. We're going to transition into a learn-it-all culture, which is about as high AQ as you can be. This idea that success isn't in being the expert, but success is in constantly being a sponge, open to learning, open to growing. And so they made mugs and they put them in all the kitchens about how you need to be a learn-it-all. They put up posters everywhere. He trained the executive team to constantly come back to this idea that people needed to be learning constantly. And then look where they are now. Their stock price has 10x'd in, the few years that he had taken over. And then they actually have been innovators in AI, and really been bullish about their investments there. It's been a totally different Microsoft. And so that is just like an N of one example that I think about all the time, where you can hire the best and the smartest people, but unless you're also pushing them to be agile and adaptable, then you're not going to get the performance out of them or your company.
And so much of, I think, what we're talking about today has to do with the psychology of being an investor, which is something that we really talk about a lot here at The Motley Fool, is that mindset with which we approach portfolio building. And of course, that looks very different for every individual investor. But I think as we've seen a lot of volatility in the markets of late, there's, of course, a lot of exciting trends in which to invest. Of course, AI is on the tip of every investor's tongue, space, quantum computing, the list goes on. But as we see these movements and changes in the market, whether it is concerns over a bear market or just the ongoing volatility, what are some principles that we as long-term investors can apply to not see those changes as threats, so to speak, but as proactive change events?
Yeah. So the first thing I'll say is that it's about defining what you think makes you successful as an investor, right? And AQ is really at the heart of that. And that's actually fun and exciting. I think it opens up an opportunity for everyone to see this moment where the markets are quite volatile as a moment to level up. And, there's some doors opening for people to, gain expertise and footing in places where they haven't had it before. Which I think is actually really exciting. In this new world, there's also new opportunities and new chances to sort of broaden your portfolio in a way that you hadn't thought about before. So one, I want to say, let's all level set and just say this is an exciting moment. It's scary, right? It's different. But with newness and with change invites in opportunity. And so there are three strategies that I would recommend given that mindset. And one is one that we touched on briefly, which is this idea of practicing strategic unlearning. So on a regular basis, conducting some sort of audit, and the cadence of which is going to depend on how actively you're making portfolio changes. For some people, once a month is enough. For some people, once a week is enough. But it's basically going through your entire, or not, doesn't have to be your entire, but it's basically going through pieces of what you've invested in or parts of the knowledge that you've made assumptions on. And you can choose one piece every time you do an audit. And then you simply ask yourself, is there a part of my core belief about this industry or about this investment that is no longer true? And how can I find new or different sources of information or data that could prove or disprove this? You can also ask yourself, what parts of my workflow are no longer accurate? Are there, ways that I've been writing investment memos or making investment decisions that no longer hold true to how quickly or slowly I need to move through these decisions right now. What parts of my expertise might I be clinging to too tightly right now? And then with that strategic unlearning, you remove something. Maybe that means actually removing something from your portfolio, or it could mean killing a legacy process, redesigning, an investment thesis from scratch and seeing if you come up with the same thing, but doing that again. But really what you're doing is you're creating new space for new expertise to emerge. And I think a lot of us were trained to just add more, right? Add more information, add more knowledge. And that can be a fire hose these days if you're just absorbing, and people can become overwhelmed. But high AQ people are also willing to let go of some of what they've learned before. That's the first one. The second thing I will say is expand the contours of your universe. And so a lot of this comes down to talking to other people, growing your network, coming up with new strategies and tools for the way that you invest, because the blueprints that we've used in the past are not going to carry on towards the future. And I think that that's just something that we need to accept, that maybe you've been taught, you've grown up on value investing, or, you've grown up with a specific mindset of the way that you manage your long-term investments. Not to say that it's not going to be fully accurate, but part of your new thesis as an investor is going to be brand new. I call it bushwhacking. It's an important skill of AQ, and it's creating a path where none existed before. So we are not going to just be able to rely on, the old philosophies or the old ways that we've grown up, whether it's in business school or what we've learned from our mentors about, the principles of investing. We can hold on to those, but we also need to create our own. And so this means talking to people who are maybe newer or, more free-flowing with their investments. Not to say that you should take everything from them, but just expanding your repertoire of what is possible in terms of the way that you see the world. And so I think that's a really, really important one. Like, how do you expand the aperture of your universe, your toolkit of investing, even if it seems opposite to what you've learned in the past, because you're knowing that like what the future demands is not a path that has been already clear cut. You're going to have to make your own way, because the world is not the same as it was even 5-10 years ago. And finally, the last, skill I will use is to know yourself really well. It's about self-awareness these days. And you have to know your biases, your limitations, the places where, you're holding on too tightly to pieces of your investments, or where you're holding on too tightly to the way that you see yourself. Because a big part of AQ is about relinquishing the ego, which I think makes everyone a better investor. When you can see, the mirror very clearly, you're not going to be tricking yourself into, specific decisions that may not be the best for you. You're able to look at yourself very clearly and say, okay, maybe I made this decision a month ago, but it's just not right now.
Yeah, I think that's an incredibly informative kind of framework to use as an investor, because it can be very easy to get caught up in the kind of day-to-day machinations. And really, I think taking that more holistic perspective is just incredibly helpful. And it goes back to what we've been talking about today, and that you've been talking about, is this idea of, pivoting one strategy, being agile rather than just reacting, which could take the form of panic selling, for example, as an investor. I want to also talk about, how can some of these kind of micro challenges that we might encounter, whether it's in daily life or as investors, kind of prepare us to also take calculated risks in our portfolio, right? We've talked a lot about how we can kind of reframe some of the issues in the market to avoid panic selling, but how can we balance that with greater agility and risk taking that has that reward in the long run?
Yeah. So I will go back and say that, that taking risks, and maybe the way that I'll actually phrase this is, it's a little bit actually even more of like a bet than a risk. I think risk kind of can imply at some point that, there's a danger on the other side. There's something that feels like it might be damaging to us in some way. And, maybe the way that I'll phrase it is like, a bet is a bet, or even taking a risk is an action that you're taking without knowing the consequences of it. You cannot predict how it's going to unfold. And that is at the heart of being an investor, right? Like no one has complete crystal ball certainty into anything that's happening in the future. And so what I think is that the more risks we take, we also need to have anchors in our portfolio. So matching the two, right? Like and in our lives too. So the more risks that you take, actually the more consistency and the more balance that you need to sort of feel grounded, steady, stable, making decisions, not from fight or flight or from panic, or from, future, trying to predict what the future is, but rather from a very calm and grounded place. And so the advice I'll give is like, what if you are making a lot of risks as an investor, what in your life can you actually create a lot of grounding and stability around? So maybe this is like your daily habits, your exercise routine, what you eat every day, the people, places, and activities that create a sense of safety and stability. Because it is from that vantage point of calm, of steadiness, that you can actually take risks with a really clear mind, because they are the backbone of what is going to get us through all this volatility, right? Like, I do think that, if you're in the heart of the tornado, you can't just keep clinging on to that piece and hope that the tornado is not going to get you. You just have to let go and just say, okay, I'm here. I'm going to swirl around a little bit. But if you have an internal sense of calm, then you'll be able to handle that swirl so much better, and take risks that aren't from a place of scarcity, fear, but rather from a place of belief, opportunity, and confidence in yourself.
Something we've talked about a lot today is how AQ applies to how we research, our portfolio, how we handle uncertainties in our portfolio, how we handle mindset. Something else that we talk about a lot here at The Fool is the concept of diversification. Obviously, is building a portfolio around a wide range of companies and investments, all of which can provide different growth catalysts over an investment trajectory of decades. And I wonder, how does having that high AQ approach change one's definition of diversification or impact our approach to diversification as investors?
Yeah. I mean, I think that's I think that is a tricky line to walk, right? Because there are going to be many opportunities to diversify your portfolio, especially as technology is shifting and changing. And some are going to be good and some are going to be bad. And I think that there's like this real pull towards, okay, different, better, new technology, but some of this is going to come and go, and it's like actually not going to be good for your portfolio. And so I think really looking at like, what is your, what are you, let me actually back up for a second. I think what this requires is like having a really grounded, again, black hat mindset of, in advance, creating your thesis for what you want that diversification to accomplish. Because, so much of expanding your portfolio is very green hat thinking. Where could this go? Where could this be? But you want to hold yourself to something. I think that's actually like the balance of AQ, is that you're pushing yourself into new frontiers and new opportunities. But at the same time, we do need to have a very concrete and very clear system and strategy for what we're investing in, and a way to evaluate ourselves, especially in newer industries, right? Like, how can you actually hold that mirror up to your investments, the newer ones, and as you diversify your portfolio, and say, like, I need to know kind of like early, like what the early indicators are, the medium indicators, and sort of long-term indicators that this is working or not. And so I think that's actually like the balance here, is like you do sort of that more long-term groundwork around, okay, I'm going to set up my thesis correctly, and I'm going to set up my evaluation structure correctly, so that I can go back and look at these at like regular intervals. And so that's, again, what we're talking about here is, green hat, black hat. Can you balance sort of the optimism and the potential with also like a very clear, diligent, and reality-based construct for how you can evaluate yourself?
I think one of the things that's also been interesting that we've been talking about a lot recently as investors is how we can kind of distinguish between structural shifts in value in certain markets versus sort of a temporary algorithmic glitch. And I mean, we've seen this a lot in the AI-driven markets recently, right? Where, suddenly there's huge sell-offs in software stocks and other areas that the market perceives are going to be fundamentally forever disrupted by AI. The future, of course, may look a little bit more in the middle, not quite that dire for a lot of these businesses. But I think it's an important question to consider, how can we use AQ and some of these principles you've been talking about to distinguish between when there are those kind of very structural shifts in value that may warrant revisiting our thesis about certain businesses, certain markets, versus temporary shifts?
Yeah. I think that the biggest differentiator is to know when you should actually, I don't want to use the word panic, but I think that this is like actually at the heart of AQ, right? So someone who's lower AQ, you're going to start to see some of those sell-offs, and then it's going to be really disorienting from you, and you're going to want to panic sell, right? Mm-hmm. Or you're going to want to immediately make a change. And I actually think that high AQ people, they avoid making those changes right away, right? Because, and it's not to say that they put their head in the sand and they avoid what's happening. That's different, right? Like AQ is about taking in that information, absorbing it, and you don't actually want to move so quickly and reactively, because AQ is very much a skill that stems from yourself. It's a psychological difference, right? So two people, one who's low AQ, one who's high AQ, they just see the world two different ways. So the low AQ person is completely undone by reactive change, by unexpected shifts in the market, whereas the high AQ person is able to handle that with more calm gravitas. And so that's actually what I'm talking about. Is oftentimes people think that high AQ means like reacting right away, making that change, switching what's in your portfolio. But I'm actually not saying that. Like it's different. Like you are comfortable, you feel at peace with these dramatic changes in the market, and you actually aren't reacting to them immediately when you are high AQ. You take them in, you observe them, you can see what you can do to bring them from a very reactive place to a very logical place in the way that you're considering them. And then once that is done, then you can make a decision from there. But the whole sort of workflow of AQ is taking something that feels jarring, confusing, upsetting, not reacting to it until it has been transmuted into a place that feels normal, calm, where you can handle it with sort of objective reality. Because I do think that fast sort of jerky motion of like panic selling, reacting immediately, that's actually that's low AQ, even though you are taking action. High AQ is about sort of that intentionality because you are so comfortable with these disruptive changes.
Yeah, and of course, that's kind of the core of what we talk about in our kind of philosophy and strategy at the Motley Fool, is that mindset of long-term investing and really focus on building a long-term thesis for each business, and putting our capital into quality businesses that can stand the test of time and not being reactive to the markets. And so I think that's something that's incredibly applicable there. We have a few minutes left in our conversation today. Something that you've emphasized throughout our talk has been this idea of really durable skills that remain valuable regardless of what the future holds, and that are applicable as individuals, as investors. What do you think are the most durable psychological skills an investor can develop to be successful through decades of market highs and lows?
Yeah. So and maybe I'll just go and sort of define the concept of durable skills, and durable skills are the ones that endure over time, no matter how much technology shifts. The opposite of that are technical skills, which are very much about that specific moment, specific job, specific use case that they're in, and that's everything from financial analysis to graphic design to social media marketing. The average half-life of a technical skill is 5 years, and in the tech industry, it's 2.5 years. And so the durable skills are the ones that are persistent. And for an investor, some of those durable skills are going to be, one, looking for feedback, right? Like looking for feedback on your own decision making and on your portfolio, constantly having that mindset of wanting to grow and change. It's about learning aptitude. It's about putting yourself in a position where you can do that strategic unlearning. You can constantly pressure test yourself and your biases, and that's going to hold true no matter what industries you're looking at. It doesn't actually matter. And I would say the same thing is true too when you're looking at evaluating a company and building your thesis about them long term. Don't just look at their quote unquote technical skills and what they can currently do today. Actually look at that organization's durable skills too. The ones that aren't just about sort of the flash in the pan technology that's happening right now. What is the quality of that leadership? What is the quality of that executive team's decision making? When have they weathered past situations where they've been at the brink of collapse, and how have they managed to bring themselves back up? Because all of those skills will endure over time too, no matter how much technology changes their place in the market. And so for both things, one, like as an investor, you're honing your durable skills, but also in terms of building your investment theses, you're going to be also searching for those same durable skills within organizations too.
Yeah, that's incredibly helpful. Thank you for that. One final question. I think that one of the big takeaways I've had from our conversation today is that AQ is one of the most important skills that we can pass down and implement, certainly as investors, as well as in other areas of our life. But as we look ahead over the next 5 to 10 years, how can investors prioritize remaining financially agile rather than just financially literate?
Yes, definitely. I think part of this is also, creating a learning plan for yourself, knowing where it is that you want to go. And as we discussed before, there are moments to be reactive to the market and let that dictate the type of investor that you need to be, right? What you need to learn. But then there's also this part of knowing that you are going to be evolving and growing, and constantly having a individual development plan for what your gaps are. I've definitely seen investors who say things like, "Oh, well, like I'm just not an AI person, right? Like I'm a consumer person. Like those are the companies that I understand. Those are the markets that I want to be in." We can't say those rigid things about ourselves anymore. You can't be like, "Oh, well, like I'm an X person, not a Y person," because it's just not true. We all are so adaptable innately. And that's actually what we need to remember, is that AQ is our birthright. We all have the potential to be extremely high AQ. It's, our ancestors were nomads who were hunter-gatherers, and they didn't know what was going to happen tomorrow. They didn't even know what they were going to eat or where they were going to sleep. And so they were dealing with like a much greater degree of volatility than even the most, risk-taking investors are, right? We like ultimately live in temperature-controlled buildings, and we can like predict our future with like a far greater certainty. And so I think what it is like, know that your value and your expertise as an investor will definitely change, and that there needs to be a letting go of the rigidity of how you see yourself, where like, oh, I only look at X type of market or X type of company, or this is where my sweet spot is. Let all of that go and think from a first principles perspective of where it is that you want to take your expertise. Like, don't let the past dictate where you're going to go in the future.
Well, I think you've given us all a lot to think about today, Liz, and it's been so fun to chat with you and talk about the concept of AQ. And for those who are listening or watching, check out Liz's book, AQ, A New Kind of Intelligence for a World That's Always Changing. Liz, thank you so much for joining me today.
Thanks for having me, Rachel.